Welcome, everyone. Thank you for joining for this Arka showcase. And we've got a very relevant topic to our times around ESG and climate technologies. And I'm excited to have a wonderful panel here. So we'll get started with intros. So a bit about us. So I'll be the moderator for the panel today. I'm founder of Emergent Ventures. We're a Bay Area-based early-stage venture capital firm, manage about $140 million, about 35 portfolio companies. And we have increasingly been excited about the whole space. We have a portfolio company called New Day, which is an investment platform for ESG investments. They have a few ETFs. They're launching more ETFs in the space of ESG targeted investments. We have a company called WEJO, which is an AI-based platform for climate science, which is targeted towards financial institutions, energy companies around how they do better modeling. But we're seeing a lot of exciting things ahead of us. So I'm excited to learn more about what you guys are seeing in the space and your thesis around the market. We'll start with a round of intros. Maybe we'll start with Antonia. Yeah, you may want to go first. Yeah.
Happy to, and thank you for having me here. Antonia Soler. I'm originally from Barcelona, and there I studied my degree or my bachelor in chemical and mining engineering, and then my master's in industrial engineering. But also I did part of these studies in Sweden. As I was finishing my studies, I joined Hilti almost 9 years ago. I work in the global headquarters in Liechtenstein, always more in the product side. So I was in supply management, in product management, moved to the US, to Dallas, where we were setting up a team to develop products for the US market. And with that, I also moved to the Bay Area, where I was managing one of the sales teams. And also, as I was there, I had the opportunity, right, to see many things around innovation and how our customers were very innovative, and also how some of them really cared about sustainability and said that their employees wanted to have more to be part of the company as they were joining the company, right? And so June of this year, I had the opportunity to join the tech office, where it's the part where we are working on all the scouting and investment side for Hilti.
Great. Thank you for sharing that, Antonia. Welcome to the panel. Andre. Yeah.
Sure. Well, thanks for having me here, Ankur, and everyone. I'm Andre Turenne. I lead investments at National Grid Partners. National Grid Partners is the investment and innovation arm of National Grid. And for those that don't know, National Grid is one of the world's largest investor-owned utilities. We do gas and electric and also clean energy like wind and solar throughout the US. We also do undersea high voltage cables connecting Europe to the UK. And about 5 years ago, they started National Grid Partners, headquartered us here in Silicon Valley, even though National Grid is in the UK and in the northeast of the US. And we focus on innovation and investments in companies and technologies that help National Grid become more innovative and just generally helping the company become more ESG and decarb and all of digitization and all those things that are important. We have a portfolio of we've invested about $400 million over the last 4 years. Our portfolio is about 35 companies. We do investments at all stages, seed through late stage. And there's a lot of focus on ESG related companies, and I can talk more about those later.
Great. Thank you, Andre. Wonderful to have you on the panel. Bimal.
Hi, thanks, Ankur. Thanks for having me on the panel. I'm Bimal Mehta. I'm a startups partner at SE Ventures, which is a corporate VC arm of Schneider Electric. SE Ventures is a €500 million fund. We focus on the new energy landscape at the cross-section of energy and technology. We've thus far made 36 investments and 5 fund-of-fund investments. And our main focus, as I mentioned earlier, is kind of with the digitization, decarbonization aspect of it. And we also focus on sustainability and the whole electrification side of things. And personally, I kind of look at the looking at technologies where it relates to AI, IoT, and cybersecurity under the main focus themes of Schneider Electric under digitization, sustainability, and electrification.
Great, wonderful. Marco.
My name is Marco Marinucci. I co-founded Hello Ventures about 6 years ago. We are a multi-stage mobility fund that, of course, looking at mobility, prioritizes climate tech from its inception. Indeed, our first investments were right in the grid balancing business for electric vehicles. We managed about 120 million. We had 3 exits in the last 3 months. 2 of them they just went public. One got acquired by a public semiconductor company. We are active all over the world. Have about 20 portfolio companies. Have a sweet spot in the Series B investments, but are pretty stage agnostic. But we try to come in at the point where the impact of go-to-market, for example, is the highest, and where companies start shaping up in a structure that makes the necessity of working together with the tier one, for example, in automotive field, a priority, and that's typically Series B. So that's what we focus on. So to my person, I'm electrical engineer by training, originally from Germany, and located in San Francisco. I'm excited to be here. Thank you for having me.
Great, welcome, Marco. Great to have all of you here. Maybe I'll dive right in. And ESG is obviously a trending topic. We're seeing a lot of activity and media coverage here. Would love to hear from you as you look at private companies in this space. What are they looking to do in this space, and what are some of the challenges you're seeing the whole these companies run into? Anybody wants to take that?
Yeah, maybe I can get started. So we at Hilti are a strategic investor, and we are a manufacturer for construction. And actually, the picture I have behind here, it's one of the projects we have participated with other organizations where we are looking at the future of construction. And ESG is a big part of it, right? And as all the different aspects we are looking into, it comes into play, we're always thinking about how we can help our customers be more sustainable. So as we are now also internally developing new teams that are focusing on this, also as we look at the startups and companies to partner with or invest, we are always having this framework of helping our customers be more sustainable.
Got it. Any thoughts on this, Andre? Maybe.
Yeah, I'd say look, I'm looking at it from an investor perspective, right? So we do all stages of investing. And so I sit on boards that are really early stage, seed and Series A. I also sit on boards that are late stage or pre-IPO, and even some that have gone IPO recently. And the way they approach ESG is completely different depending on the stage you're at. So these companies that are seed and Series A, they're really sort of in survival mode, right? They're focused on building their product, getting customers, getting enough cash. It's almost like a constant state of crisis. So they're not really thinking about ESG. They're just not. But when companies start to get mid and late stage and they're raising lots of money in the board, they start, I'm seeing it now more than even 5 years ago, there wasn't this kind of discussion. But nowadays, ESG for later stage companies is a big deal. Everything from how do you structure your board properly for the social side of it, cultural diversity, openness, just the culture of the company. Environmental becomes a big deal for companies that are later stage and going public. Governance on the board is now much more front and center than it used to be. And certainly for public companies, it's even so. I'm inside of National Grid, which is a really large company. And the entire focus of the company I started 5 years ago at National Grid. And even within that last 5 years, the entire focus of the company has shifted towards net zero. when I first started, we weren't focused on net zero, and now it's the entire focus of the company. And that's, right there, and environmental on ESG. So I think the bigger the company gets, the more ESG matters. Really early stage investing, it's less so from what I'm seeing.
I think valid point. I think certainly it becomes more important as companies get bigger. What are the challenges you're seeing in terms of companies actually implementing that? I don't know, Bimal or Mark, if you have a point of view on that.
Yeah, so I think in addition to what Andre said, right, some of the challenges the companies are facing in implementing ESG, I think it's not just the ESN part of it, but it's more of the governance and also ensuring that you're kind of doing it ethically, and there is verification in terms of not just for today, but for the future, that whatever carbon offsets or the decarbonization efforts you're taking is sustainable. As you may or may not know, like Schneider Electric was voted one of the most sustainable companies recently, and we've been fighting this climate change for over 2 decades, right? Like building technologies which kind of help with this new electric future. And in addition to what Andre said, like, we are not just looking at investing in companies or startups for from an investment perspective, but also what we can offer to our customers and also use it internally across our 200 plus manufacturing sites. And when we kind of look at the challenges, the biggest challenge is not necessarily in the scope 1 and 2 as an independent corporate, right? Like, I think it kind of comes both the upstream and the downstream of scope 3, and how do you kind of measure, monitor, and kind of reduce the emissions, if you will. And that's kind of been the biggest challenge when it comes to going across your 4 walls into the supply chain, and then having the proper standards, formats, and visibility into terms of what your suppliers are doing, so that you have true visibility and kind of have a true reporting from an ESG perspective.
Fair enough.
Yeah.
Fair enough. Those are some of the key things. And are you seeing startups which are looking to solve these problems? Or the Marco, if you have any point of view on that?
Well, we see a lot of startups in the climate tech space, and we have seen that, I think, over the last 5-6 years. When it comes to the social aspect and governance aspect, that's something that I think a lot of companies, to be quite frank, are struggling with, and are trying from the perspective that I see, often to solve it on a superficial basis and not at the core. But that's, to be quite frank and realistic, is just something that's going to take time. It's going to take maybe even a generation to bring. If you look at the most founders in the deep tech space, in the climate space, it's heavily male, for example, and to change that's just going to take like a generation. When I think about like my niece and nephew, they play now at the same time with technical toys. I don't think that's the norm, and I don't think that used to be the norm in the last generation. And so we still see that today in technical companies when we see founders and boards, and it's simply a function of the interest. But we see, especially in the companies that go public, an effort to fulfill that. I'm a big fan of not only fulfilling a requirement, but a big fan of actually thinking about the impact of what we're trying to achieve, and that's simply going to take time.
Yeah, I would just follow on what Bimal was saying. One of the biggest emerging trends in this whole ESG thing is the compliance side of it. I mean, there's lots of new software and sensor platforms out there that are trying to monitor, what companies are doing. For example, how do you track which carbon molecule, whether it's oil or gas, is green, which one is not green? How do you track it from one location to the next? And there's startups out there with really cool technologies that does that. We're looking at those. Other kinds of software, like how do you determine which projects that you do internally from a big company will even promote the best ESG results? do you do this project or that project, and how does it translate into good ESG results? And so, and the software, how do you de-risk the company from exposure to climate change, for example, and how do you get to net zero? I mean, you have to track it somehow. And so we've got a couple of investments in companies that are doing that. One is a UK company called Resilience, and another is a company called Copperleaf, which just went IPO. But they're examples of companies that are doing those sorts of things.
Fair enough. That's a good segue into the investment side. Obviously, we all want to sort of invest in companies which are doing good, and I think climate tech and ESG is sort of a wonderful space for that. Having said that, I think some of us may remember from, let's say, the mid 2000s when the clean tech was hot and a lot of people made investments, and and a lot of technologies were worthwhile and have borne fruit, but they did not really end up being good investments at the time for many years to come. And would love to hear your point of view on, are you seeing good investability in this space, and maybe examples of companies you guys have invested in, and just how you're building your thesis around, will this lead to good returns or not? Maybe Antonia, if you want to go first.
I think there is also a market that is shaping, right? When we can see a certain demand or certain requests from customers that are asking for certain aspects that we know when ESG is part of our strategy, we are going to fulfill much better customer needs, right? And then the return will come. We also look at it on a way very strategically, right? Do we have a common vision? And then if we have this common vision, then we set up the path, right, to support that.
Got it. Are there any specific investments you guys have made in this space?
So we haven't yet made investments in the space. We have, since for the last 2 years, we have started a lot of activity internally with internal teams first. And as we are now developing these internal teams and further developing the strategy, we are looking at many more startups. And before, I think it was Bimal that talked about transparency and about suppliers, right? So that's an area we are looking heavily on how we can increase the transparency up and down the chain. So for increased transparency from our suppliers, but also how we can bring more transparency to our customers.
Fair enough. Fair enough. Bimal, any thoughts you may have in terms of investability? What areas, any portfolio companies you guys are backing in this space? And
yeah,
thinking about
no, absolutely. I think in terms of investability, I think it's still early, or on the flip side, one way to look at it is there's a handful of startups which are getting all the attention, and that's kind of given rise to, in some sense, like lofty valuations, right? So I think from a thesis perspective, we've been working or breaking down that entire sustainability or the carbon management map into few sections, and kind of really looking at, enterprise software reporting to supply chain tracking to, and the carbon offsets and marketplaces and financing aspect of it. So we kind of really doing a double click on each of these areas to kind of say where it makes sense, which of these startups are focusing on segments we would be interested in. And some of the startups are, for the right reasons, kind of focused on certain industry segments, whether it's CPG or food and bev or, agriculture or soil management, forestry type of thing. So we kind of really looking at which of these would kind of really make sense, have some kind of traction, and have the ability to kind of scale and sustain itself from a growth and revenue perspective, right? So in terms of certain investments we've made, some are in the the new energy landscape or the solar side of things, which kind of helps us get a better view on like how fast the solar install market is going, or from a financing perspective to help with that whole energy transition to renewable energy. So we've made investments in Energetic, Energy Sage, and then through our fund of funds, we have investments in Persephone and Aclima. So those are some of the ones based on what's section of the whole climate tech ecosystem you're looking at.
Got it. Fair enough. You guys are pretty, built a good portfolio around a number of areas here. Marco, any thoughts on how you're looking at investability here and what may have you done here?
Yeah, so for me, similar to what I said earlier, it's very important to distinguish between, what is a trend, what is a word, or what is a trend that people just use because it's hot in the market and money needs to be deployed that way, in that direction, and what is factually where do we really believe benefit for the climate or for societies is being created, and before ESG and after, and today that hasn't really changed. Like, for example, we invested in a company called BreezoMeter that now about half a year ago got into the so they do air quality management measurements, and they got into every Apple iPhone. When you go to the weather app, you'll see air quality, which is very impactful for our climate, or a result of our activities. That was an investment we made like 5 years ago, and it's developing, especially in this time now, really, really strongly. And then we just did two investments in a company called AMP Automotive Power that designs the battery management systems and onboard chargers and DC converters for basically almost every of the EV companies that you see that are popping up out of nowhere right now, and already some of them are already public. They often outsource that technology part to a company like Automotive Power, and those are for me the best way to spread the climate impact through our investments. But in the end, those companies need to finance themselves, because otherwise we just waste time and money and have no impact on climate.
Makes sense. Certainly looks like your portfolio is trending very well, and working with strong partners here. Andre, you talked about a couple of portfolio companies earlier, and maybe I'll tag along another question here as you talk about your investment thesis. You talked about one of your companies went IPO. You mentioned recently, and Bimal, you've talked about high lofty valuations in today's market. Also from an exit perspective, and of course now we're seeing over the past year SPACs coming in, also helping companies exit. What is your thesis not only of investing but also exiting these companies, and what are you seeing in terms of the broader exit market shaping up for these kinds of companies?
Well, the exit market has been great for all kinds of companies lately. It won't last forever. The company that I was involved with that just went IPO, Copperleaf, they considered a SPAC, but ended up going traditional route because their financials were strong enough. I think SPACs, everybody knows the issues with SPACs. Essentially, the way I view a SPAC is they're a late stage fundraising tool for companies. I mean, they're not really ready for IPO. Their financials are not ready, but they get a big slug of money, like a pre-IPO round, except that the downside for the company is they end up as a public company. So then they get a big slug of cash, and they have a couple of years to deploy that cash in order to get the financials moving enough to sustain themselves as a public company. If they burn through that cash and they don't use it properly, then their stock's going to crater and they're going to become orphaned. So it's a big gamble when you go SPAC. It's also a big gamble for the public people that buy into the SPAC. But from the investor perspective, it's great because they get an exit. Not sure how great it is for everybody else. We would prefer to have a company go public the more traditional way, which means they have stronger financials. That's sort of my view on SPACs. But in general, the question you were asking about, clean tech 1.0 that happened 10 years ago or so. I mean, that was, that was a painful process for a lot of people, and a lot of VCs lost a lot of money at that time. The good news today is there's a lot more funding available now than there was back then from all kinds of different sources. Back then, it was mostly VCs and some government, and a lot of money was lost. So the bad news today is the fundamentals of business haven't changed, right? So companies still need to generate revenues, have good growth, and have good margins, or your returns are going to be subpar. VCs are more careful now today than they were back then. So at National Grid Partners, our strategy is to, of course, we're going to invest in companies that are important to our business unit. But the trick is to find companies that are important to our business units and that are VC investable. They're growing fast. And so it's like a Venn diagram. We want to find both. And many of the strategic companies that are important to our BUs are not investable. They're not high growth. And so we won't invest in them. That's really the trick there. Today, ESG is more important. There's more money being thrown at the problem. There's more long-term investors like Breakthrough Energy Ventures. They don't care necessarily about having the top VC returns. They can be a 20-year or more fund. We don't have that luxury. Most VCs don't. So, we're very picky about the kinds of companies we invest in. They're mostly software companies at National Grid Partners. They're not a lot of hardware companies. Like our portfolio doesn't have any battery companies. We don't have any EV companies. We don't have any we have one or two hardware companies, but we're pretty careful about hardware companies and low gross margins. So, that's the thing. I don't think it's the company fundamentals have changed much since Clean Tech 1.0. We're just smarter now about what to invest in and what not to invest in, and let those other companies be invested by other kinds of capital that are out there.
No, all good points here. Antonia, any thoughts?
Yeah, actually, when you asked the question before, I also had the thought about the comparison when investing on hardware or software, right? That we also know that sometimes we might need more time when we are investing in hardware. And I think it will probably the same applying with ESG, right? And so for our case, because we are also privately owned, we always have this longer term perspective on will this eventually support our vision and our strategy? And if the answer is yes, we are willing to wait, right? And if we need to wait a longer time than what a traditional VC would wait, we are okay with it, right? So I think that if we have more examples like the one that Andre shared or this one, right, we can have the capital to support ESG into the future.
Fair enough. That makes sense. Thoughts on that?
Sorry, it just broke up. Did you just ask me?
Yeah, now we can hear you.
Yeah. Well, on the SPAC market, I agree with Andre that with the existing financing structures of like a normal VC fund, that just basically creates that notion of like why hard tech companies that VCs invested in end up SPACing for multiple reasons. But one, of course, is the return expectation. The other one is a funding gap for companies that simply, like we see this a ton in mobility, they just need more capital and more time. The VC model might not be the best. The original VC model with 10-year funds might just not be suited very well to fund those companies. I mean, one good example is Rivian. I mean, we can talk about day and night if the valuations are appropriate, but right now, at least they're stable, and most VCs couldn't or wouldn't invest in a company like Rivian, although the climate impact will be there, simply because of how the model is structured. And so, what I see and what I like about the SPAC movement is it created awareness that there are companies out there that need financing that have high impact potential. What I don't like is it was definitely used by some companies to go public or to create exits where that didn't deserve to be where they are today. And the public market, I think, in the end, there's going to be a lot of backholders, which I personally think is a terrible way to advertise for hard tech and climate tech. But I think the awareness was created for the need for more funding for companies that simply don't have those financials, like software companies often do, and the quick growth, but the potential long-term impact that can be very positive for the climate.
Makes sense. Yeah, I think there's definitely a you're saying that it's a mixed bag, and then you can use it well or you cannot use it well in terms of how these companies are using SPACs and other vehicles to sort of raise capital. I know we're approaching towards sort of the end of our time. Bimal, maybe some closing thoughts on this topic.
Yeah, sure. I won't be redundant to what Andre said as well, right? But I think what I'll say is that just because of the awareness and also not just corporates but also governments kind of funding it, and more money coming in, right? Like, I think you look at all the funds, like the traditional VC funds, as well as private equity funds also announcing their clean tech fund or net zero fund, etc. So there's a lot more money available, which is a great thing for the clean tech startups. Having said that, I think just to kind of put the same, diligence and the process in place in terms of who do you invest and when, is becoming tricky, right? In terms of like a lot more money being put in for very early stage companies. So it at times you have to be patient in terms of kind of going and not getting sucked into the FOMO aspect of it. And I think we've already started seeing that, right? Like, there is only a handful of companies who are kind of gaining that momentum and traction, and they will be prime candidates for getting acquired or merging with someone else to kind of ensure that they can build that revenue profile to kind of set themselves up for an exit, whether it's through the IPO market or not. So, I think we saw Planetly, I think was just recently acquired by some other company. So, and I think anybody who from that growing landscape gets any semblance of traction, I would expect that will not last independent for long, or will continue to either kind of grow through consolidation or kind of think about going public in the next 2-3 years.
Fair enough. I think we covered quite a bit. It's obviously a very broad topic, ESG and climate tech, anywhere from climate-focused technologies to sort of governance and diversity. But I think we covered quite a bit in sort of 30 minutes. And just to summarize some of the things we're hearing is from you is there's definitely a lot of great investable themes in this market, and compared to the past, as long as you focus on what customers are really asking for, you focus on generating sustainable value. And then the good thing now is there is also different kinds of capital available, and you have to fit yourself with the right kind of capital, and there's some patient capital, and so as long as you match yourself with the right kind of capital, there are good returns to be generated here. And certainly themes such as software oriented tend to be more attractive to VC kind of investment, but there are other kinds of capital available for other companies to make sure that all the entire spectrum is well covered. And wonderful. I think this is very helpful. I think we'll have a lot of entrepreneurs who'll be would love to get in touch with you. And thank you for joining this event and being part of the Arka showcase. Wonderful to have all of you here. Thank you.
Thanks for
Thank
having
you. Thank you.
Thank you.